to this channel. Here we teach you how to make money. In our today's video about how to invest in shares or stock market. Across so many social media platforms, I have seen people asking, how do I start to invest in shares, or how can I make money from shares? This has been a widely asked questions in so many platforms, and so I saw it wise for me to make this video so that I can share with that person that is asking, where do I start from, how can I invest in shares, how do I make money? Yeah, so if you are that kind of person, this is the right channel for you. Sit back and watch until the last bit. I want to put this in a very layman's language so that everybody can be able to understand. Owning shares means that you own stake in a public listed company. When you own stake in a public listed company, it means you own a percentage of that company. So you are among the owners of that company. So in this scenario, you will be able to make money from the company either through dividends or when the share value of that particular company increases. Of importance to note is that investing in shares or investing in stocks is very different from forex trading, and in one of the upcoming videos I'll be sharing about forex trading, and we do comparisons. We see what is the difference between shares trading and forex trading. Shares, it means that you own stock in a particular company that you are interested in and you have bought shares in, and you are entitled to earning profits in terms of dividends by the end of the year, or you can also gain profits through changes in prices in the stock market. So what happens with the shares of companies that are listed in Nairobi Stock Exchange? The share prices keeps on fluctuating, and now investors take advantage of this trade like any other marketplace. The same way you can buy an item in a market, so the traders take advantage of this fluctuation of shares. For example, if you buy, you can buy shares at a lower value, and then after some time the share price appreciates. For example, you can find the share price of a company, a single share is trading at 20 shillings. You can give it time, and once you see the share price has gone up to, for example, 25 shillings, you can sell off now the share, making a profit margin of 5 shillings per share. So the amount of profit that you make is determined now by the volume of shares, the number of shares that you own in that particular company. For example, if you own 5,000 shares and the price fluctuates from 20 shillings to 25 shillings, now you multiply that figure. That's in a very basic layman's language. Now, there are two types of investments in shares. You can be a speculative investor, or you can be a long-term investor. A speculative investor is a short-term investor. This is the person who chooses to invest in shares. They keep on speculating that probably the share price might go up, so they buy in shares in bulk and then they sell when the prices goes up. What informs the buying and selling of shares? Buying and selling of shares is based on external factors, like for example the political situation in a country, or you might be anticipating a major announcement by a company that may shift the share price of that company. For example, if there is an anticipation of a negative information from the company, or maybe there is an announcement of a major scandal in a listed company, people might anticipate that the share prices might go down. So people rush, or the investors, let me call them the investors rush to offload their shares or to sell their shares. And by the rules of supply and demand, when so many people are selling their shares, the value of that particular share goes down. So also there might be anticipation of some good news. Maybe there is a buy-off from another company, or any other good news in like for example there might be change in management, whereby the investors can anticipate that the changes will influence the company positively, and they might want to be part of this company. So what happens now, people rush to buy shares for this company which is listed, and again, going by the rules of supply and demand, uh, the demand gets high. So when the demand is high, the price shoots up. So this is the information that speculative investors play with. So you buy when the share value or the share price is low, and you sell when the share price is high. This one I would recommend for a seasoned investor, someone who has the knowledge, business knowledge, to determine the direction of the markets. For someone who is a beginner, I would highly recommend that you buy you invest in shares for the long term option, because one, to be able to make a significant return or profits, you need to buy very huge volumes. For a beginner, or for someone who doesn't have the luxury of having very huge capital to start with, you may not be able to make very significant gain in terms of profits, because also you understand that you have to pay commission. Is in the broker, you have to pay some commission to the broker who is facilitating the buying and selling. This information of public listed companies is available on the website of the Nairobi Stock Exchange, NSE. So it's now upon you to visit the website for the Nairobi Stock Exchange. You see all the companies that are listed there, and then now you evaluate the companies that you might be interested to invest in. And some of the things you can look at is the management structure. You can look at the history of the company, how the company has been performing. And then now, once you settle that this is the particular company that you want to buy shares in, the next question for you is, where do you start? Because, like, for example, if you identify company X, you cannot go direct to the offices of that company and you tell them, I have come, I want to buy shares for your company. No, you cannot do that. For you to be able to access the Nairobi Stock Exchange, you have to go through brokers. And the brokers are companies that have been authorized to trade on behalf of clients. And in other language, they are called investment banks. For example, we have banks like Dyer and Blair, we have Standard Investment Bank, we have Apex Africa Capital, we have Suntra Investment Bank. I have just mentioned a few. We have more than 20 investment banks in Kenya. Of importance to note is majority of commercial banks also act as investment banks, so you do not have to walk all the way maybe to Nairobi to be able to open an account with an investment bank. So you can visit any of commercial banks, which is the ones that are available to you, and you can be able to buy shares through them. Another thing that I would recommend before you choosing an investment bank of your choice, there are banks that give you the option for online trading, and I find this very convenient, because you can be able to deposit money and you can monitor the movement of the stocks online, and then you can instruct the buying and selling of shares online. So you do not have to be in constant communication with your bank for you to be able to trade in the stocks. So it gives you some convenience. So it's upon you. You can go do your own research and find out which one is more suitable for you. So we have said, for you to be able to buy shares, you need an investment bank. So now in this investment bank, you will open a CDS account. A CDS account is like an holding wallet where you will be depositing your money, and then now from this money you shall be instructing your broker or your banker to buy the shares that you are interested in. And of importance to add is, you do not have to trade in only one stock or to buy shares for only one company. You can split your investments in different companies. You are not restricted to buying shares of a single company. So your work will be, you can deposit money into the CDS account, and then you will be monitoring the movement of the stocks in the NSE market, and then now from there you can be instructing your banker on which shares that you want to trade in. To open a CDS account, you will require your national ID, KRA PIN, and a passport photo, or any other thing that might be required for the sake of KYC. The minimum shares that you can buy is 100 shares. So depending on the share that you pick will determine the amount of money that you are supposed to invest in a particular instance. For example, if you choose a company whose shares is trading at Kenya shillings 30, you will be required to invest Kenya shillings 33,000. You have no reason for you not to invest in shares, because you can start with very little amount, as low as 3,000 to 5,000 Kenya shillings, and then you can keep on adding from time to time until now you accumulate very huge volumes, and then now you can sell at a profit, because in most scenarios, most of the companies that are listed on NSE, the share value keeps on rising. So if you bought a particular share at a low price, probably in the long term, after 5 years or 10 years, you can find that that amount has more than doubled or tripled, and you can sell it at a profit, which is an advantage for you. Personally, I believe shares, investing in stocks, is the best option for you to invest, and especially to save your money. Instead of having your money lying idle in the bank, having it in a CDS account and buying shares is the best form of investment that you can do, especially when you are a beginner. You don't have that huge volumes of money to buy land or any other investment options that might be available. Although still, when you have a lot of money, still shares is still the best bet, as long as you can be able to do your homework well. Choose the best company that gives you the best value for money. I highly recommend that before you pick on any particular company, do a thorough history or background check on the history and the performance of that company, especially in terms of payment of dividends, in terms of profits, and the management structure of that company, and I believe you'll be able to pick the best for you. And I wish you all the best in your journey to making money. Thank you.